Do you think the SPAC market is oversaturated? Are we in a SPAC bubble of sorts?
So, Emily, first of all, thanks for having me on the show. The SPAC market has been a really revolution for all of capital markets. This product was obviously a very nascent product several years ago, but actually Deutsche Bank actually has been in this market for over last 15 years or so. We've got a dedicated team of about 20 professionals focusing just on the SPAC market. And while there has been a significant amount of activity in SPACs, we think this market is here for the long term. It is actually becoming an asset class, if you will. The classic, your long only funds as well as hedge funds are all kind of investing in this market, and it is really, as I said, a true asset class. So while we have seen a significant amount of activity, as you said, over $100 billion of SPAC activity, SPAC capital just being raised just in Q1, which actually is, if you look at last 5 years, we haven't raised this much capital in the last 5 years combined. So what we are seeing right now is clearly a flight to quality, right? There have been a lot of companies that have gone public through the SPAC, through SPACs, but and the SPACs have returned, great sort of, if you will, the returns for the investors have been really solid last year. But because of this rotation and this flight to quality and the valuations being significantly stretched, there is an increasing amount of capital flowing into this, and much like any other market, we are seeing some normalization in valuation, normalization in multiples, as a result of which we are seeing some pullback in the SPAC market. So, is it an overinflation? For the moment, it sounds like it, but much like any other markets, we are going to see a normalization in this market as well. Investors are certainly going to see some good returns if they continue to invest in SPACs.
But what percentage of the tech companies that are going public via SPAC are actually good companies, good deals, companies that should be going public at this time?
Yeah, so I would actually step back and think about the sponsors of the SPACs, right? Right now, I would hazard to guess that about 70 to 75% of the sponsors who are sponsoring the SPACs are really not that high quality sponsors, which again, too many SPACs chasing too many companies. The quality of the companies, the quality bar has kept on going lower and lower, which has resulted in many of these SPACs trading at $10.50 or even below $10. As a result of which, now we are seeing some pullback in the market. I actually do believe that many of the companies that have accessed the market so far, we've taken Luminar, DraftKings, Rocket Labs, Rover, Nerdy, Matterport, and several others that we're working on, Indie, Blade, and others are all really good companies. But there is also, along with that, I would say, probably a 6-to-1 ratio of bad companies to good. And so, investors obviously need to be very careful, and SPAC sponsors also need to be very careful as they think about the quality of these companies. There was a time when, many of these companies obviously didn't have real revenue. They did have a good business plan, and there was an opportunity for the companies to really accelerate their growth if they had the right capital, which is why, they went the SPAC route. But now they are public companies, and they need to perform like public companies. And so, they all need to kind of, sort of work into their valuation.
So we heard that quote earlier from Citigroup, and I'm curious what you think the market for tech M&A and IPOs looks like through the rest of the year, and if you think the pace of deals will keep up, and what Deutsche Bank's role in that market is going to be.
Yeah, absolutely. So the tech IPO market is much like the SPAC market has been on fire, right? In Q1, we saw a total of $137 billion raise in both SPAC and non-SPAC IPOs, $42 billion of which was in non-SPAC, and 50% of that was tech IPOs. So, tech IPOs have raised about 21 billion or so of capital, and there's a long list of, really solid pipeline for tech IPOs to go public. Companies like, obviously, we've all heard about Coinbase and UiPath and AppLovin and so on and so forth. But along with that, given that we are now slowly coming out of this pandemic, there's obviously availability of vaccine, there's economic recovery. The cost of financing continues to remain low, and sources of capital. I mean, SPACs. There's about $150 billion of dry powder among the SPACs. And then, we are continuing to see on the tech side, digital, transformation and evolution of business models. So along with that, we are seeing a very healthy activity on the M&A side as well. We've seen some massive deals happen over the last couple of years. The AMD Xilinx, NVIDIA ARM, Salesforce acquiring Slack, even cross-border deals like S&P Global acquiring the IHS Market. So we are seeing a very, very healthy progress in the M&A market. The multiples have kept going up. The markets are obviously very supportive and conducive to continued sort of capital growth and continued M&A momentum.